Well, Chinese authorities could be getting ready to bail out China Vanke, one of the country's biggest property developers. According to a Bloomberg report, regulators preparing to allocate 20 billion yuan of special local government bonds to buy unsold real estate from Vanke as the government stares down a funding gap of about 50 billion yuan or 6.8 billion U.S. dollars. For more, China Beige Book Managing Director Shehzad Qazi joins us here on set. Shehzad, great to have you with us. I mean, putting a floor in the property sector would mean a lot. I mean, not just for the property sector, because we did see the developers across the board rally in Hong Kong trade, but also in the confidence, I would imagine, of the Chinese consumer.
Yeah, that's exactly the plan here, right? Beijing wants to put a floor under the property market, especially with China Vanke, because if you're trying to encourage folks out there to go out there and buy apartments again, well, having one of the biggest apartment builders fail isn't exactly the right move.
Right. But you make the point that we've already started seeing a turn in the property market. Things are actually getting better there already.
There have been a lot of positive signs over the last several months, and we're certainly seeing it in our proprietary tracking. You know, we're either getting better sales results some months, we're getting better pricing results some months as well, the indices. Now, has the property market completely turned the corner? Are things great again? Obviously not, but they're not getting worse, and they possibly could be near the cusp of a bottom.
When you take a look at all the data points, does it look like there will be additional stimulus? Because that's what the equity investors want to know, investors in the Chinese market.
There will be stimulus. The question is how large. Probably not nearly as big as whatever estimates the street will ultimately come up with. And then, of course, the second question is, where do they target it and how effective is it going to be? More money for manufacturing and commodities producers? Well, that's not really going to cut it. More money for households, yes. Are they politically willing to do that? We don't know.
The numbers are what they say they are, right? So their growth rate, everyone wants to always debate their growth rate or not. They hypothetically will never, or realistically will never run out of the potential to stimulate their economy. Yeah. So do we, to Melissa's point, do you start buying that basket full of Chinese-related stocks now as a proxy, or is there going to be a disappointment in the next couple of weeks/months?
There's always going to be disappointment. I'll tell you why. Right now, you've got tariff risk, you've got geopolitical risk. When you don't have that, you've got Chinese, political risk internally with the CCP moving in and cracking down, because at the end of the day, they don't care about the stock market. They don't care about investors. They care about political power. If you can come up with a formula and then invest based on that, that's probably the way to move forward.
So sort of following up on that same point, when we had our housing crisis here, we had TARP. And remember, first it failed, and then they passed it, and then that wasn't enough. It wasn't remotely enough. And so the market didn't really bottom until 6 months later. Where do you think they are if this is analogous to that?
Look, I, again, think that things are starting to improve. What they're trying to do is provide doses of stimulus, pare back the restrictions, not all in one go, but do it sequentially over, several months or a couple of years at this point. So I think we're probably going to see better results out of the property market this year than we had last year. Again, as I said, the pain is already starting to ease.
I was going to say, and this is for Carter, and this is all part of this conversation, but you talk about investing and looking at ETFs. K-Web, if you could put up like a 5 or 6 year chart, this to me, and Carter, I'm curious as your thoughts, classic bearish to bullish reversal, and it speaks to, Karen bottoming out in the economy. I get it, but you got to be in front of these trades, and I think that's what the market is sniffing out here.
That's right. The market is, and whether you do FXI or K-Web, they've got about 95% correlation. Obviously, one's heavier in tech, but the principle is something that was very, very bad, that is not only starting to stop going down, is actually turned up, a bearish to bullish reversal buy.
Right. Shehzad, you made an interesting point in terms of consolidating political power. And yes, that is absolutely true. But isn't part of that, for the Chinese consumer, many are invested in the stock market. Many are invested in the property market. Many, they're in all of these asset classes that have been hit so hard. And so in order to bolster and consolidate power, they also have to make these people happy, right? So that's all really part of it.
You would think so. And they would have done a far bigger bailout, because that's the quickest way to restore people's wealth, get them to go out there and start spending again. Secretary Xi doesn't seem super concerned about that, though, from what we've been able to see so far.